Video, we'll be going through how to calculate the tax basis of your stock holdings. So normally tax basis of any investment that you sell through a brokerage firm or mutual funds that you may redeem through your mutual fund company are reported to you on your Form 1099-B statement. So this is the instructions from the IRS on how to report this on IRS Form 8949 in the case that you don't receive a Form 1099, or in the case that your Form 1099 doesn't show the tax basis. So let me take you real quick on a look at IRS Form 8949 so we can see exactly what we're talking about. So at the very top of the form, we have IRS Form 8949. For short-term transactions, we have box A for transactions reported showing basis that was reported to the IRS, and then B and C are either transactions that were reported on your Form 1099 but did not reflect basis that was reported to the IRS, and C would be one that the transaction wasn't reported to you at all on your Form 1099. And of course, on page 2 of that, we'll get to that momentarily, but that is the long-term calculation, long-term versus short-term capital gains. So IRS Publication 550 is going to be where we get much of this information from. So we're basically going through IRS Publication 550, and we see some of the examples in Chapter 4, Sales and Trades of Investment Property. So we're not going to spend too much time on that because I did break this down into a calculation on a PowerPoint presentation, and then we'll go through the actual worksheet that they provide so that we can actually do this ourselves. So in example 1, we have 300 shares of XYZ fund. And this is from IRS Publication 550. You can look this up yourself. I did change some things. So 300 shares of the fund, 100 shares in 2019 for $1,000, 100 shares in 2020 for $1,200, and in 2021, $2,600 for 100 shares. So how do you calculate? So in 2023, you sold half of those shares, 150. What is the basis of the shares that you sold? So we'll walk through how I mapped this out in the example, and then we'll go to the actual little example picture that they give you so that you can do this on your own. So 300 shares of XYZ fund. So if you bought 100 shares for $1,000, that would be $10 a share. For $1,200, 100 shares would be $12 per share. And then when you bought it at $2,600, $26 per share. So that's pretty straightforward. The total cost would be $4,800, and then the cost per share would be $4,800 divided by 300, so $16 per share. So if we so now we're going to calculate. So the total adjusted basis of all the shares that you owned right before we sold was 4,800. And then the total number of shares that we owned right before we sold was 300. So we're going to divide this 300 into the 4,800, and we get $16 per share. And then we sold 150 shares. So now the basis of the shares that we sold ends up being $2,400. So that's the calculation little worksheet in IRS Publication 550 that shows us this. So, and that's what we get right here. $16 per share. So now let's see how we would report this on IRS Form 8949. So IRS Form 8949 is the tax form that reports sales and dispositions of investment property, right? So, or capital assets. So we're going to check, let's say, box E. Of course, this was all long term because the most recent purchase was in 2021, and we didn't sell anything until 2023. So clearly all of these are long-term transactions. So you would write a description of the property. Again, 150 shares of XYZ fund. According to the 8949 instructions, if you acquired shares of a security over various periods of time, you can literally write the word various in column B. So we sold them on June 1st, 2023. We received a total of $4,500. As we calculated, the cost was $2,400. There are no adjustments. Adjustments would be applicable if you had a transaction that was reported to you and you had to make an adjustment from that. But since this is a transaction where the basis was never reported to the IRS, we're not having to make an adjustment because the IRS doesn't have any information to work with. So in column H, we calculate the gain or loss simply by subtracting column E from column D. Now, if there were adjustments, we would add the amount of the adjustment to this, but we don't need to. So $2,100 goes into this. And then if that was the only transaction, this $2,100 would go into line 8B on Schedule D. If box D were checked, since it's not, it will go into line 9. Now, if it were checked on box, or if box F were checked, then you would report this on line 10 of your Schedule D. Don't worry, all of these instructions on where to put this on Schedule D are literally at the bottom of the form, just out of the camera view. I apologize that you're not able to see that, but when you're operating within Form 8949, you'll actually see that. So the publication goes into a couple more examples, right? So example 2, let's imagine that you sold another 50 shares later on December 8th, 2023 for $40 each. So the basis would still be $16 a share because we didn't really do anything different. But let's take a look at how we would report that. So in this case, the total revenue, $40 each, correct? And we sold 50 shares, so that's $2,000. And then the 50 shares times $16 per share is $800. So the difference would be $1,200. Again, this is still a long-term transaction. So now we are at the point where we've made these reports, and it is, depending on how this is reported to you, you may be able to consolidate some transactions. However, you would definitely need to look at the instructions to determine that. On the flip side, if you need more room, you can always add additional sheets. So I would use that as the caveat. So the publication gives one more example, example 3. So let's go back and reimagine that between selling the original shares on June 1st and selling the 50 shares on December 8th, in the middle of that, we bought 150 shares at $14 per share on September 8th. Now, how would that look? So We would have to calculate the basis of the remaining shares, which was $2,400. That's 150 times the so yeah, 150 times the $16 per share. Sorry, that was a brain fart. So the cost of the shares that were acquired on September 8th would be $14 times 150, so a total of $2,100. You would add that up as the total adjusted basis for all shares, which is $4,500. The total adjusted basis per share would be that $4,500 divided by 300, or $15 per share. You'll note that this is lower than the original basis of $16, but that's because when we rebought these shares, we bought them at a lower price than the original basis. And then the total basis of the shares that were sold would be 50, not $50, but 50 times that $15. So now you do run the risk of some of these being classified as short-term transactions, because even though we have 300 shares, we only had 150 shares. We have 150 shares that we've had at least 1 year, and then we have 150 shares that we've had for less than a year. Now, out of the scope of this video is the different ways that you can categorize the basis of shares that you've accumulated over time. So you can select specific lots that you sell. So in this case, if we sold 50 shares and we still had some that were long-term, eligible for long-term capital gains, we could say, well, I'm going to choose that my 50 shares sold happen to be the ones that we bought a while back, eligible for long-term capital gains. You can actually instruct your broker to institute a first in, first out. So what that would mean is when you did the original sale of 150 shares, since you bought in 2019, 2020, and 2021, you could say my 150 shares would have been the 100 shares in 2019, 50 of the shares in 2020, and then when you sell your next 50 shares, you could say, well, that takes care of the rest of the shares that I bought in 2020. You can also say, I'd rather try to minimize my capital gains. And I noticed that, in a different scenario, maybe I'm selling some shares that I just recently bought at a loss. And I have a very low basis for stocks that I've had for a very long time. So instead of doing the first in, first out, where I would just be eating a lot of capital gains on stocks that I've had for a very long time, if I buy a stock and I sell it, then I'm only going to recognize the gain on, something with probably a higher basis. So there are different ways that you can categorize this. And again, you would have to set this up with your broker or your custodian to make sure that they're reporting this properly on your Form 1099-B. So let's just say that this is the scenario that played out based on the fact that we sold 100 shares from the 2019 lot and 100 shares in this year from the 2020 lot. Of course, if we decided to sell back 50 of the shares that we had just bought in June, then we would be putting this into the short-term transaction field. And then you would have to check right here depending on which box you check, A, B, or C, which line you put this on Schedule D. So I hope this kind of helps you calculate the tax basis of your stock holdings. It's always a good idea to check your Form 1099s to make sure that you have basis reported to you. Sometimes custodians, especially when you transfer from one brokerage firm to another, the IRS has instituted a tighter policy, so you don't see this as often, but sometimes basis does not transfer, or there are really old transaction records that have not posted. For example, I started investing in Home Depot stock through a dividend reinvestment program in the 90s, and I had to go back when I eventually sold that stock through 15 to 20 years of basis calculations to make sure that I had the right basis to report to the IRS, because my brokerage firm didn't have any of that record. They're not required to keep 20 to 30 years worth of records on investments that they've held or that you transferred to another firm and stuff like that. So hopefully this will help you. I will put links in the show notes to articles and videos that we've created on Form 1099B, so you can see where that should be reported, as well as Form 8949 and Schedule D. So if you like our articles, check out our website. Go to teachmepersonalfinance.com. If there's a tax form that you have a question on, type it in the search bar, and odds are pretty good that we've either written in the article about it or we've created a YouTube video, or both. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, please post them in the show notes, and I'll see how I can help you out. Thank you very much, and have a great day.